Now that things are reopening up again, I think the urban exodus trend is starting to reverse and people are wanting to come back to the city. It's becoming alive again. It's Kenneth Yim, and I want to explain to you in this video what it means for the real estate market. So Toronto's on track to have vacancy rates and rental rates go back to where pre-pandemic levels were, probably by early next year. And the reason why I know that is because in the rental market, we're starting to see multiple offers. In July alone, we're starting to see 3,000 rentals. Like, we're seeing the highest amount of activity in, I don't know, for a long time. So what does that mean? Well, it just means that rents are rising very quickly. We're starting to see multiple offers, and the supply is just dwindling. And when it comes to real estate prices, there's really just two things. Like, there's supply and there's demand. Now, when it comes to supply, I don't think there's as much supply out there. The reason why is because cost is going up. It's called cost push inflation. We've all seen the memes during the whole lumber shortage and all that kind of stuff, where it's more expensive than gold and things like that, right? But steel and concrete, all that stuff is going up. And not even just materials, there's also labor as well too. All the trades are getting more expensive because everything's in demand, and the price goes up. If you want to get a good contractor to come in, then you're just gonna have to pay more for it. All that combined with low interest rates, it's just causing everything to basically be more expensive. With the CPI index, Bank of Canada just recently increased their housing allocation by 3%. So the makeup of the basket of goods has gone up to like 29%, something like that, almost 30%. But that just doesn't mean anything, because it just means that the carrying cost is low because interest rates are low. They don't factor in the cost that it takes to actually have the down payment to buy the place. So I think that's just really increasing the overall purchase price or the asset price. And we're starting to see this asset price bubble, if you will. Maybe it's not a bubble, but we're seeing asset prices go up in all sorts of assets, whether it's stocks and bonds or real estate, cars, even everything. Like, we're starting to see everything just go up in value because inflation really is real. And I think it's more than the 2% target that they're trying to achieve. I think it's somewhere like 3% this quarter. But ultimately, with inflation, it's just going to drive up the prices. And once prices go up, they rarely come down. They come down maybe just a little bit, but I don't think it's going to come down back to where they were pre-pandemic. That just means that supply is going to cost a lot more for everything. We've had this problem for a long time, at least in Toronto. There's a lot of NIMBYism, right? So not in my backyard, where basically, if you live in a low-rise neighborhood, you don't want a high-rise in your area. The neighbors all oppose all this development, and there's a lot of strict zoning policies on what you can and can't build. Now, I'm not saying just build like a 40-story tower in a neighborhood. I'm not saying that. There's reasons why the zoning stuff exists, but that's also limiting the amount of supply that we have out there, right? There's also things like development levies and taxes. All that stuff is going up. The cost to develop a property is just through the roof right now through development levies. I think it's just really causing, again, high prices. Also, on top of that, to mention supply, you guys heard about Core Developments recently buying up. They're announcing they're going to buy $1 billion of residential assets in Canada by 2026. They're taking a lot of supply off the market to increase the rental market, which is not a bad thing. It's just going to push up the rental demand because the availability is there and prices are going to be higher. I think that's really causing the supply issues. Then you have demand issues where we have aggressive immigration policies with over 400,000 immigrants coming to Canada every year, and majority of them come to Toronto anyway. So we're at 1.2 million people, over 1.2 million people coming to Canada in the next 3 years. I think that's going to be an issue. And during the pandemic, you've noticed that a lot of people have moved to bigger backyards. They need more space, now that we're spending more time at home. That's just causing a lot of change in the market and people wanting to upsize their housing and all that as well too. And then I think one more thing that's interesting that I heard the other day is that Canada, compared to the US, we don't have a lot of good companies on the TSX. Like, we don't have a lot of good Canadian companies out there. I mean, not to knock Canada, but it's a lot lower than what the US has, like the US stock market. That probably explains why the proportion of people buying condos in Canada or investments in Canada for that reason is so much higher than what they are in the States, because money's cheap and they don't know what else to buy. So like, how many people have 2, 3, 4, or 5 condos, right? Like, it just kind of makes sense how the supply for real estate is just going down and the demand is going up. And one thing I should mention is that when prices are high, the rental market just pushes it up even more because people don't have the capital to get into that first property. They're going to have to rent for a while, or they maybe even choose to rent because they choose to liquidate their rental properties. And that just goes full circle, because when the rental market's high, there's more investors, and then more investors decrease the amount of supply, more rentals. Just a big cycle, right? That's my theory anyway. So I think in the long run, you can't go wrong with real estate. I don't think it's going to cause a big crash anytime soon. And the rental market is just a proof of that. It's going back up to pre-pandemic levels probably by early next year. If you want to know more about the real estate market, we'd love to talk to you. Just go to our website, click on the link below, and then book an appointment to talk to us. And if you're watching this on YouTube, click on subscribe, leave your comments below, tell me more about what you want to see, and we'll go from there. Thanks.
Add it up.